This is your investment update for June of 2017. Very volatile month in the equity markets. We finally got some volatility that we've been talking about. For the month, the S&P ended up about 60 basis points. Global stocks ended up a little under 50, and bonds were down about 10 basis points in the U.S. and abroad. So little bit of a decent month at the end of the day return-wise, but the market was super volatile the entire month. What's really causing the volatility, we had the worst month since 2008, early 2009 for the difference between like the NASDAQ 100 and the S&P 500. The NASDAQ 100 is largely tech stocks, and it's largely made up of the stocks that are huge market caps that also dominate the S&P 500. And you had the S&P 500 actually up 60 basis points, but you had the NASDAQ 100 down about 2.5% for the month. And those were largely driven by what we talked about before, the FANG stocks, which is Facebook, Apple, Amazon, Netflix, and Google. Those are the big trendy stocks that have been driving the market the last couple of years. You know, for the month, Apple and Google were down over 5%. Netflix was down over 8%. You know, all those stocks were down. Our models largely don't have any to very little exposure to those stocks, so we don't really participate in that part of the market. So you did have a broader rally, but the leadership in the market looks like it's breaking down and could be changing, so that's definitely something to watch as we go forward. But it does look like we are going to have some further volatility. We had a day where the VIX index was up 45% in one day. Generally that shows the beginning of a trend. So we're going to continue to watch that, but we would expect it to be choppy going forward.